In this video, we are going to look at chart patterns. Now, there are a lot of chart patterns you can use, but again, like I said before, in this beginner section, I'm not going to just give you all the chart patterns because it's going to give you information overload, and it's not going to be helpful because you're not going to use all those patterns. So I'm going to show you the patterns that I use and the patterns that you can use during the day that show up, most of the time, and that will help you to trade the right way. So these patterns right here, I call these consolidation patterns. All right. Now you have the triangle right here, and then you have the horizontal because it's pretty much straight. Right, the highs and lows are pretty much matched up together, and then we have the flag, which is a more slanted pattern right here, or you could call it a channel where it pulls back, okay, but it's slanted. All right, we can actually reverse this right here to show you guys how it looks on the downside. So when you reverse it, the same thing, guys. This is a down triangle right here, a down horizontal right here, and a down flag right here. So let's go to some real life examples. All right. So here is an up move right here in a nice horizontal consolidation pattern. We want to get in as soon as it breaks the top, okay, which is right here. The top of this horizontal consolidation, we want to get in as soon as it breaks the top, okay, and we can put our stop loss. I like to put my stop loss below the pattern, okay. So we're going to get in as soon as price breaks that top. I put my stop loss below the pattern. Again, I'm going to show you guys, how to do this later on, but I'm just showing you guys real quick, okay? And I'll get it for my profits. So it'd be something like this, okay? Get in as soon as it breaks the high and look for my profits. Now, this is a triangle, okay? Lower highs. Sometimes the triangle has a flat top with lower highs, or sometimes the top is slanted like that, but it doesn't matter as long as it looks like a triangle, okay? And when it breaks the high, okay, of the triangle right here, that breaks the high, I'm in the market, and I put my stop loss, okay. Again, I'm gonna show you guys all that stuff like stop loss and everything later, but put my stop loss below the pattern right here and look for my profits. So let's go to another one. So the last one, guys, is the flag, okay. You only need two connections. So you got the swing high right here, another swing high right here. These connect those swing highs. Same thing with the horizontal and the triangle. You just need a couple of swing highs, connect the swing highs. All right. Now the flag, as soon as it breaks the flag, okay, you can, with the flag, you see how we have the market going down, up, down. You can actually wait for it to break this high right here, or you can wait for it to break this high right here. So, there's different ways you can do it when it comes to the flag. Me personally, if I think the market is so bullish, I'm just going to get in right away. So as soon as it breaks this channel, I'm getting in right away. Or if you want to look for more confirmation, we have this swing high right here. Let me zoom in for you guys so you can see this swing high right here. You can wait for it to break that swing high, okay, and then get in. Right. So that is the channel, the flag, and the triangle. Okay, so these are the next patterns that we are going to use. A double bottom, okay, where you have two lows right here. Now, a lot of times a low is not, exactly right at the same level. Sometimes a low could be a little bit higher, like this. Okay, or sometimes the low could be a little bit lower. As long as not drastic, like something like this, then I would say, this probably don't look like a double bottom. But, if it's a little bit off like this, or a little bit up like this, it's all good. Okay, same thing with a double top. If it's a little bit higher, a little bit like that, that's good. And or if it's a little bit lower, that's good. Okay, so when it comes to the market, guys, don't expect the patterns to look perfect, okay? It's not going to be perfect all the time. Now, the head and shoulders, so let me flip this real quick so you guys can see this. So when it comes to the head and shoulder patterns, this is the head right here, this is the left shoulder, and that's the right shoulder, okay? So usually we like to get in right here when it comes to this resistance line right here. We get in right here, or you can wait for it to break this low right here and get in right here, okay? Maybe at a pullback, or get in exactly when it breaks this low right here, or whatever the case is. So that's the head and shoulders. We can flip it upside down. You're gonna have an inverse head and shoulders, right, where the market is bullish, and it's the same thing, but it's upside down. Okay, the market's going up, and it finds support right here, and it goes back up. So let me show you guys some real life examples. So right here, guys, we have a nice double bottom right here. We got one bottom right here, okay, and another bottom right here, and the market just shot up. Okay, the way you can get in is you can probably get in right around this bottom right here, depending on, we have some support, and you can probably put your stop loss below this level right here and look for your profits. So let me show you guys the double top. So right here, guys, we have the market pretty much in a downtrend, and it went up a little bit, but it went up, created this high, and went up back up. Okay, just create this double top right here. Again, remember, it doesn't have to look perfect, as long as it's close enough. It is close enough, and basically it went back down. So you can either get in right here, put your stop loss anywhere above here, or you can wait for it to break, okay, this low right here, and get in. So, you know, different ways you can get in. Again, I'm gonna explain that later, but pretty much that's the way you can get in. So let me show you guys the head and shoulders now. Okay, guys, so here's the inverse head and shoulders. We have the head right here, we have the left shoulder right here, and you have the right shoulder right here. As soon as the market came back to this left shoulder, it found support, okay, and it found support at the swing high. So this looks really, really good. And then it gave us a nice bullish bar right here, but we could have got in right here, okay, or you can wait for it to break this high right here to get in. So many ways you can get in, but I just want to show you guys the pattern and how it looks in real life. So let me show you guys the regular head and shoulders. Okay, so here's a regular head and shoulders, guys. Okay, we got a head, we got the left shoulder, okay, right here, and then we have a right shoulder right here. Okay, so the right shoulder basically found resistance right here. We can get in right here, okay, or you can wait for it to break this right here. Okay, they call this the neckline. Okay, the neckline right here. So this is the neck. If it breaks the neck, most likely the market is going to continue to go down. So you could get in as soon as it breaks the neck, or you wait for a pullback to get in right here. Okay, now that's the real life example of head and shoulders. So this is the end of this video. See you guys in the next video.